Now we live. Tube, what up?
What's going on? We here.
How y'all doing?
Early.
You see who's with us.
What's going on, good people? Greetings and salutations to everybody out there. Happy Market Mondays. We got a lot. We got a jam-packed show for you guys today.
Troy let me back in his house. Thank you. I appreciate it.
We invited him back.
Yeah, we got Ian, the master investor himself, in the building, live in the flesh.
Hey.
This is twice in 1 month, was it?
Yeah.
Oh, you was here
Like 2 weeks ago.
2 weeks ago.
That was February? That was
January. Yeah.
It's my Obama. She can't.
Back to back, like I'm on the cover of Lead the Weapon.
Yeah, let me put the notification out on social media. Get everybody in here, and let's get it rocking. We got a lot to talk about today. We got of course, EYL alumni extraordinaire John Henry is going to join us, and if anybody's been watching the stock market today, it was crazy. The whole investment space was crazy. Elon, they announced that he brought $1.5 billion. Tesla brought $1.5 billion of Bitcoin. And of course, that made Bitcoin go crazy. It's up 20% right now. So
the second company to a public company, so Square was the first. So this is going to be, and both of them have Bitcoin in their bio name, right? In their bio on Twitter.
Yeah, I know Elon did.
Yeah.
So yeah, it's crazy. It's a crazy time that we're living in right now. I've never seen so much enthusiasm about investing, which is a good thing. So we here, man. We here to give it to the people, live and direct, no chaser. And today's gonna be a legendary show, just like all shows are legendary. So let's get into it.
And I'm gonna work on my smiling face, right, and project. I love y'all. I love y'all. YouTube, what up? All my family, what up?
Yeah.
I love you guys.
Yeah, let's get it going. Hold on.
I'm gonna try and drop 80. I don't have any books to drop on the floor tonight, but I'm gonna try and drop 81 and give some good ones. And also too, when you guys chime in and ask your questions, you have to obey the rules of not asking too many. But if you slide in a stock or two, maybe we can review something tonight and go crazy.
Yeah, Ian said, "What do I do after I put up 81?" I said, "Now you guys score 63 3/4, bro. That's what's next."
For it.
Is the YouTube not working for live chats again?
I'm not sure. Let me try to get in there.
I don't know what's going on with that.
First IG, now YouTube.
Yeah, it's always something, man. It's always a hassle with this.
I'm about to get in there.
All right, so let's start this out. Because we got a pristine guest. We can't keep waiting. So, greetings and salutations to everybody. Welcome to Market Mondays. If this is your first time watching, welcome back to Market Mondays. If you're a loyal listener and supporter, we appreciate every one of you guys. This week is a big week for Earn Your Leisure. We have Percy Miller live in the flesh tomorrow.
That's a legendary.
Yes. Shout out to James and shout out to Wise also.
Shout out to Denise.
Shout out to Denise the Broken.
Shout out to MG.
Shout out to MG. Oh, the comments is back on YouTube. So that is tomorrow. Master P, quite possibly the biggest thing that we have done so far for Earn Your Leisure. We had about 20 people in the room. Legendary situation.
Live studio audience.
Yeah, it was crazy. So shout out to P, man. That comes out tomorrow at 5:00 Eastern Standard Time.
Yeah.
On Earn Your Leisure's YouTube channel and on all podcast outlets. Shout out to the bro Ash Cash. His show is off to a huge success debut. Inside the Vault. That's on our YouTube channel and all podcast outlets. Shout out to Dave Shands. He just dropped his episode with Grant Cardone. Check that out on all podcast outlets.
You cooking.
Yeah, he cooking. He having a party right now out in Atlanta, live viewing. So shout out to him.
EYL Network, man. You know, we moving along. And then EYL University, we have a class on Wednesday. With the credit dude. Shout out to the credit dude. Good dude. We're gonna do a credit class on Wednesday. So make sure you check that out, man. EYL University, we got a lot of tricks up our sleeve. The class last week was a huge success.
We got some breaking news coming.
Okay.
It's coming.
So every week we just gonna keep bringing fire. And it's 75% off right now. So I'll put the link in there. EYL University if you want to join.
When y'all gonna quit discounting?
It's going up. No, it's going up. It's going up. We know we do.
If it was up to me, to
63,000. That's a fact.
Yeah.
They don't respect it when the price is too low. They don't respect it. I noticed that. You gotta keep it premium. So yes, thank you guys for your support. Big week for us. Troy, would you like to read the disclaimer?
Yeah, man. You know, yo, shout out to everybody that was in Miami. We got trapped in Miami last week. And,
Shout out to Miami.
Shout out to all the TSA agents that was watching when we walked through. They was like, do your research. Do your research.
Yeah.
I was like, oh, y'all watch. They was like, of course, bro. I ain't doing this TSA thing forever. So shout out to everybody in Miami. So I say that to say this. Do your own research. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. This is the word brought to you by the good folks at Earn Your Leisure and Ian Dunlap, the Master Investor. Do your own homework, do your own research. The rewards will be plenty.
Yeah, and shout out to Joe Button. Shout out to Corey. We spent the Super Bowl over there yesterday.
Hey, we want to know.
Oh yeah. We
are 1-0.
Joe, we did after the Super Bowl. We did a taboo, a game of taboo. I forgot the rules of taboo, but that didn't stop us from winning the championship.
Cooking.
That's a fact.
You know how we
Earn Your Leisure beat the Joe Button team.
Yeah,
Joe, you gonna pay your bet? I said, you know I love you.
I tell you, we
Welcome is one of my favorites, but
we rode back home like, yo, we really living like a Dave Chappelle episode.
Yeah. Joey, man. Shout out to Joey, man. Shout out to his cousin Mike. We had a dope conversation about stocks. Actually, Joe interrupted that. He's like,
his brother, right?
This is his cousin.
Oh, his cousin. Okay.
He's like, y'all gonna keep talking about stocks all night, or you gonna play taboo? So shout out to Joey, shout out to the Joe Button podcast, shout out to Joe Button Network, and shout out to the move that they made on Patreon. That's a big move for the culture.
Yeah.
Way to push the culture forward, way to promote entrepreneurship. And we love that. We love that. So shout out to him.
Yeah.
And shout out to the bro Charlemagne. We had a dope conversation with Cedar God for like 45 minutes
dope
the other day. And
solid dude. King.
Charlemagne, man, one of the best people that you ever come across, man. Extremely humble. Another one that's just killing the game. A businessman. I told him he's the next Byron Allen.
Yeah.
So
that was crazy. It was inspiring that conversation, because we talking about the people in our circle that we speak to every day, and then he laid on us who he speaks to every week, and we were like, we got a ways to go.
Yeah.
His circle is different.
Yeah. Shout out to Charlemagne, man. So yeah, just want to throw that out there. All right, Ian, the floor is yours, brother.
I was like, yo, I got to make him a host, but he's already here.
MG the mortgage guy on the super chat. Appreciate you, brother.
Matt, what up, brother?
Shout out to Nels Curry also.
I'm gonna share the screen. That's all I gotta do. I don't even gotta make you the host. Y'all can hear us now? We good? We doing acting crazy.
Mic check.
Can you guys hear us?
Yeah, they can hear us now.
They can hear us now.
That's because it's computers. They try to kick us off the mics.
Okay.
It's always something with the Zoom.
It happens.
Me, you know me, I'm old school, man. I got a yellow pad, man. I just do it off the. I do mine off the hand to
Rambling
hand.
off the top.
Rambling off the top.
Yeah.
I go hand in hand without rambling off the mic, man. You know.
They try to kick us off. Y'all good now though. All right, so we just gonna go off the MacBook. They try to kick us off the mics. All right, so Ian, they said we gotta start off. So I'm gonna share the screen again.
Okay.
Yeah. I'm gonna share the screen. Your canvas is over here.
I promise you guys it'll be worth the wait.
That's me, man. You know. That's why I don't share screens. I don't do none of that stuff. I don't trust technology. I do not trust technology, man. It's always an issue. Always an issue with technology.
Let's just open it up. All right. They can hear us? We good? Mike, text me if we good. Yeah,
Right.
you're good on this screen right here, bro.
All right, bet. Let's go.
The floor is yours.
Thank you. So I want to reveal the 25 hidden secrets of investing. Last week we talked about Robinhood and the debacle with that, but I want to walk you through some things that I think that would add to that conversation and also make you a better investor. So if you're excited about that, please put yes in chat. I love you guys so much. So I want you to go rate the podcast. I want to do something super special. So if Market Mondays get to the top 1 or 2 slots on the charts, I'm going to give away 1,000 Stock Club scholarships.
Wow.
So
that's crazy.
I want to bless you guys.
That's crazy.
It's a large number.
Yeah,
That's crazy.
because a lot of times we're like, yo, help us run it up, and then there's no benefit to them. I want it to benefit you. So go leave a 5-star, mark it 5 stars, leave a comment.
And subscribe.
And if you share with your friends, that'll be even better. So I appreciate you.
Tell a friend to tell a friend.
And today is the last day for Stock Club at this price. It's going to double. My brother's price as well. I'm going premium, Tiffany, you know. So February 11th, we got a surprise thing that we're doing. We got a crossover episode with Josh and the fellas at Compound. So we'll be sure to drop that link for you. And it's going to be pretty fun. We're going to run that up too. So
The good brother Josh, bro.
Shout out to Josh, man. Good guy right there.
real quick, I want to tell my baby, I know you're watching, so you got to go to bed soon. Don't argue with mommy about it, but happy birthday. I had a blast with you this weekend. I know you had a great time. I want to tell you I love you from the bottom of my heart. Thank you for pushing me to be a better man. If it wasn't for you, I wouldn't be as dedicated as I was and as I am now, and I wouldn't be as focused. And thank you for pushing me to be fearless. You're everything I've dreamed of in a son and more, so I love you.
Happy birthday, Xander. He called. He called right before this.
Happy birthday.
He said, "What's up, investor?"
What's up? I know. What's up with you, investor? But the biggest lessons I want to share with you, and you guys can impart this to your kids. Xander, I want you to always be kind. I want you to be fearless. I know sometimes you get frustrated when things don't go your way, but I want you to be fearless in your approach. I want you to be loving all the time. And I know it's not an easy thing to do, and your dad can have attitude at times. I don't want you to mimic me. I want you to be kind as possible. And then I will always want you to stand on your principles and what your beliefs are. So I love you. My final thoughts on the Robinhood debacle. So now that AMC is dead, I'm 10 for 10 with these shorts. So now the AMC is dead, and then of course the other players that have been pushed up have been dead. I want to give my final thoughts on a couple things. So I said it this weekend. Robinhood, of course, halted trading because they were going to go bankrupt. It was their version of a margin call. But when you're investing, I want you to type yes or no in chat. Are you sabotaging yourself and your account more than Robinhood is? Because some of you in trading have blown up accounts. Some of you have invested in bad companies and hoped they went up. Let's be very honest. Robinhood, like all of a sudden, Robinhood ushered in commission-free trading. I remember when the trades were $12.95 to go through, and that was considered a deal. Then all of a sudden, they made everyone else adjust to free commission trading. They have a couple of hiccups, and everybody wants to turn their back. But my thing is, what if this is being done for a deeper reason? What if this is the easiest platform for us to be on, and they see this groundswell of us coming into the market, and they want us to go back to complicated platforms? And they know if the platforms are complicated, we won't remain on them. So I have no financial incentive with Vlad of Robinhood. I have nothing to do with Robinhood. I know they've been robbing the hood, but I want you to tell me, have you been robbing yourself by not executing in the right stocks long term and in your trades? Because if you take more than 50, 60, 80 trades a year, you're not doing what you're supposed to do. I want to walk you through my blueprint for Xander. So since he's 6, this is the plan that I've had since he's been a kid. So my parents screenshot this, repost it. But number one, invest in the market every single month for him. 1 index fund. Number 2, invest in stocks every single month for him. That is either tech-based or the second line I need you to get, whichever sector is a predominant player in the space. So if next decade is all about electronic vehicles and space exploration and delivering chocolate to Mars, hey, we're going to invest in Mars or whatever chocolate brand there is at that moment. Number 3, save $500 a month for him in the rookie year, or if that doesn't work for you, pick your number. And then the senior year, of course, you want to multiply it by 4. Okay, this is really key. Number 4, save 90% of your money for your child until they turn 21. And then save 80% for him until he's 30. So 22 through 30, any money that you get in, please be sure to save. Screenshot this and use this for your kids, because that's what I use for Xander. The Futures program will be back on March 8th. So for those of you who are not able to get in, yes, it's going to be $1. There will be no upsell, no downsell. There's no continuity. You guys asked for it over the weekend. I'm sure you were blowing up Rashad and Troy and Mike like, yo, what's up? March 8th, it'll be back. But I want to say this. So now we came off AMC, and you guys are telling me it was going to the moon. AMC is going to hit 1,000. GameStop is going to hit 1,000. Now everyone's worried about a pullback. Stop worrying about crashes. We've covered this endless amounts of time. Look, crashes only last for 54 days. We were telling Mike this yesterday. Like, they only last 54 days on average since 1980. Okay. There's a difference between a correction, a crash, a pullback, a recession, and depression. These are all just mathematical calculations. So is the market going to come down off of highs? Yes, it'll probably drop 10 to 15%. September and October are the best months to buy, because historically, those are the 2 months the market drops the most. Be prepared to load the boat those months. And the summertime, the market drops some. So usually July or August, we have a strong pullback. Be prepared then. But why are you so worried about crashes? Please type this in chat. I want to know. Because if the market crashes, we have a lot to gain by saying the market's going to drop, and then we can short it. And for those of you that are doing options, you can do puts. Everybody in futures, we can short ES, Dow, NASDAQ, and make a lot of money of it. But why are you worried? We went through one of the worst crashes in history, recovered. As long as there's quantitative easing and interest rates are low, we're going to be fine. But maybe you were trained to worry about the crashes to trick you to not invest. To be very honest, when crashes happen, they are opportunities of a lifetime for good investors. Please stop worrying about them and dig into them and enjoy them when they happen. Of course, they'll be scary. I didn't want to look at my account in March, but if you invested during the bottoms of that market when we were in the trough, you would have been okay. Top 6 sites to use for research, and for all my members in Stock Club, you guys to get the other 7. But Guru Focus, we talked about a couple weeks ago. Morningstar is very good. CNBC or CNBC Pro is better. Dig Deep. Yahoo Finance. It's free, but it's underrated.
Hey, I know that site.
Estimize. And then the last one is Holdings channel that we talked about last week. You don't need a bunch of sites. You need a lot of execution. And then one of the bigger mistakes that you guys are making is not having a system for how you actually do your research. So do them in order, in this particular order, and you'll be fine. There's been a lot of talking going on the internet, and I want you to screenshot this and share it with your family. These are 3 questions that you need to ask people anytime that they talk to you about investing, including us. But because I'm very afraid of some of the commentary, and I'm in a bunch of the rooms and a bunch of group chats and group meetings, and some of the information that is going out is just outright deadly. Number 1, are you financially free? If the advice was really working and was really that good, the person would apply it and they would have some fruits of that labor. Number 2 is really important. It's a lot of capping on a few apps that I won't mention anymore. Rohan, how are you? How many years can you afford to not work? And number 3, can you give me one piece of advice that can help me for free that you would not benefit from? Because there's a lot of people that are giving out advice and they're trying to build brand, but they're not. Okay. And can you give me one piece of advice that would help for free that has no benefit to you? A lot of people are acting as if they're helping you, but they're really trying to build a brand. And then this is what you need to know, tying into the Robinhood thing. Anytime that something is free, you are the product. You're the thing that's going. So take Facebook, and I wish I could have got families to invest in that first round, that seed round, right? But anytime that you don't pay for a service, you are the product that is being packaged up and being taken to be sold. So I know sometimes there's some issues about, I have a perception of having a premium, but I think if the returns are high, I should, charge a premium for them. But anytime that you do not pay for something, you are being used. It is much deeper than monetary value. People are looking to exploit you, and they understand that you're excited about the market, and don't let people take advantage of you. It's better to pay a little bit now and be completely free, opposed to being bundled together like a derivative or an exotic tranche and being taken elsewhere and sold to someone else. Let's talk about candlesticks, and let's get into trading. If reading candlesticks was all that you needed to make money in the market, why isn't everybody rich from candlesticks? You can study all the patterns that you want. And I'll ask you guys have talked to a lot of millionaires. How many of them, the first thing they bring up to you is candlesticks? Never. I'm answering. The Cuban bring up candlestick, and he knows how to trade. No. Elon knows how to trade. It's not the candlestick formations, it's risk to reward and defense. And I'll let him go into it later. But if it was just doji and a double hammer and a 3-legged doji, everybody would do it. And also,
sound like wrestling moves.
Oh yeah. But if that was it, everyone will win. If you go off of a higher time frame, so we were talking about Head and Shoulders earlier. Yeah, it's better if you go off a higher time frame, like a weekly or higher, for that pattern to work. But you first need to know what the true direction of that asset is. Candlestick patterns will not get you to freedom. The thing is, and I love Steve Neeson, and I love the work that he's done, but a lot of people talk to you about chart patterns and candlestick patterns because they can't give you a clear answer of how to win right now. That's not it. Number one, I've talked about it before. Risk to reward is most important. If you are a terrible trader, you can risk 1 to make 25 and only win 4% of your trades and still be profitable. Let me be real. If you put in chart time every day, you can win 4% of your trades or 10% of your trades on accident. And then number 2, knocking down the number of trades that you take per year. When I was doing my own analysis, I looked back and I'm like, if I cut my trades in half, I probably would have made 4x more. So be mindful of that. I was talking to Mac last week about how to hedge. And he was saying, if you have positions in the market long-term, if you're not doing cover calls, how do you hedge? Number one, the biggest asset that you have is time in the market. I know you get tired of me saying it, but the truth does not need to be sexy or packaged up for it to work. The time in the market is the number one hedge. And we were talking about it yesterday at Buttons. Like anybody that trades short-term or invests short-term, you usually get killed if you let it simmer, marinate, cook for a couple of years. You'll be okay. Invest in companies with a small drawdown. So we talked about the fundamentals to look for in a company. Add to that list, how much does it draw down per year? That number needs to be underneath 22%. If you have a company that's drawn in AMC and GameStop drew down 80, it's not a good company to invest in. Told you beforehand. And then also not taking your money out of the market is a way to hedge. So people talk a lot about diversification, but the biggest trick that people are playing on you is having you invest short-term and thinking that you're going to get rich when the real answer is you're going to get rich on the back end. And the greatest determining factor of whether or not you will be rich or not is 2 things. 1, did you create a business with a serious competitive advantage? And number 2, the frequency of which you invest in the market. I'm going to tell you right now, and you guys have seen me do it in real time, build your own brand. You need a business first that you can depend on. 2, invest in entrepreneurs and companies that are better than you, and you'll be able to dominate. You need these 2 things working in tandem to be okay. But the frequency of which you put money into the market is going to have the biggest impact on your life. Because what good is it if you get a killer entry and you only have 75 shares? If that number of shares that you entered at that good entry will not allow you to get closer to freedom, it really doesn't matter. And then let's go back to the moat conversation while we're playing defense, and I'm gonna let my hoop represent some human beings, right? So there's a couple of different kind of moats that you want to have, and ideally you want them to have 4 out of the 8. So number 1, low cost of production. Number 2, high switching costs. So if I switch out my iPhone and go to a Galaxy S whatever, I'm gonna hate that I'm not connected to iCloud and everything isn't automatically backed up. Number 3, network effects. So are we tied in? So Facebook, Instagram, TikTok, LinkedIn have all built a community, a network that we're tied into. Number 4, intangible assets are very key. The value of the brand is very key, because so the Lakers, Apple, Microsoft, those all have tremendous value, and it knocks up the market share price of the company. Brand loyalty is key. So EYL's built brand loyalty, Nike, even if we go back in the day, Bad Boy, Death Row, like those had brand loyalty and a certain amount of fans that love them no matter what. A high retention rate. So are they not turning over customers constantly? But this is one of the most important ones. You want to invest in companies that almost have a legal monopoly. So at one point, Facebook had that, and Zuckerberg is our generation's Gates. And we was talking to Mike about Stryker. If you've ever been to a hospital, you've seen a Stryker bed internationally. You need to look at companies that are teetering on the line of almost having the feds come in and break them up as a monopoly and say, you guys are doing too much. This is antitrust. We need to, because once you have a market corner, I'm going to be honest with you. Competition is bad for you as a business owner. I would love if we were the only YouTube investing show. And I love Kramer and everybody else. And I love Josh, right? But if we were the only one, considerably more market share. So look at the companies that have almost a monopoly in their sector, and those are one of the ones that you should look to invest in. And then futures, my last thing. It's what I want you to practice. I want you to practice sizing up. Now, 300 trades, you need to practice before you do this. But 41 contracts, and I want you to go for a target of 16 ticks. If you hit this target, you'll be at 20,500. Trading has considerable risk. It's not for everyone. If you are not disciplined, you should not do this under any circumstances. Consult your advisor first. I already got my glasses on, so I feel right? And then if you want to create alpha or return for yourself, you need to hit a target that is measurable that you can hit easily. I think any trader can hit 18 trades for the year. Type yes in chat in all caps if you hit 18 doing this, if that number will change your life. For some of you, even one trade. But the biggest thing you can do to set your career straight and also have less drawdown is to limit the number of trades. And for me personally, I call my plan Black Wolf Alpha, right? You have to only do 18 for the year, knock those out. And then once you are able to do that consistently, the money will pour into you. The thing that I'm seeing in trading right now, everybody's trading and everybody's winning first 2 months, 3 months, and month 5 through 10, you guys are blowing up your account. And then you are having all these devastating horror stories behind it. Cap the number of trades that you can take, set a goal that you can hit on your end in a few trades, and you'll be A-okay. I love you guys. And I'm sorry we had mic issues, but things happen. As entrepreneurs, you have to learn how to adjust the same way you would in your investing and trading plan.
That's it. That's it, ladies and gentlemen. Great presentation, as always. And yeah, you know, technical difficulties is part of the game plan. And that's why I like Market Mondays, because it's a live show. So there's always going to be issues. There's always going to be problems. That's what business is about. It's not about what the problem is. It's about how you respond to the problem. Keep your composure. Don't panic. And, you know, try your best. At the end of the day, all you can do is try your best. We're trying our best. Every Monday, we try our best. Sometimes we have technical difficulties. Sometimes we don't have technical difficulties. But no matter what, we come out and we try to give the best performance that we can possibly give, and give as much information as we possibly can. And, you know, hopefully it's able to change some people's lives. So, you know, sometimes, you know, the camera's not going to be great. The audio's not going to be great.
Life's not perfect.
Life's not perfect.
You have to adjust. But also you get to see if we really know our stuff. Because if everything was just canned and then everything broke down, you can feel if something is off. But life is not perfect, and you have to learn to adjust on the fly. I could argue it's probably because it's cold as hell outside. So we got to get y'all to relocate.
That's a fact.
Oh man, our boy is here. Our boy is here.
Guys, type in chat. Is there anything else you would have wanted to learn tonight? put it in the comments, and then we'll grab them and start to answer some.
There he goes.
The legend himself.
Check.
Your audio is great.
Hey,
What's going on, brother?
what's good, fellas?
My boy got
Reunited at last.
That's it, man. Got that vintage Sean
I
John.
see what's going on over there.
You know what I'm saying? What up, Mass Investor? How you doing, man?
My guy, how you doing? I'm honored to finally chat with you, man. You've been cooking for a long time. The pleasure's mine.
Absolutely, bro. I had a chance to catch the presentation. Appreciate the moves you've been making. You guys are superstars now. You're on trucks all over the country.
Just trying to do the Lord's work.
Nah, John, first and foremost, welcome to Market Mondays. You've been a friend of ours and a contributor for Earn Your Leisure several different times. You know, you did your episode, which was a classic episode.
45.
Classic.
Yes, sir.
And then you was actually
100th
on the 100th episode with the All-Star team for that. So
That's right. I forgot about that one. That was fun.
Yeah. So you're a two-time EY alumni, but this is your first time making an appearance on Market Monday. So welcome to Market Mondays. It's a culture. It has become a culture within itself.
I see that, man. Every time I jump on the EYL platform, the first thing I do is salute you guys. I love watching the moves that you guys make. Obviously, we stay in touch personally, but to the 6.9 thousand folks watching now, and then those who will watch later. I mean, we can't underestimate the importance of the fact that you guys made the move horizontally to be a podcast network, right? Like, it's one thing to grow a popping ass show. It's another thing to then, be the new age Rockefeller Records, right? And recruit talent and mobilize the movement and give folks a voice on the platform and pull collectively. So I just think it's a masterclass within it of itself. And I don't know if you guys have done an episode where you dissected the move and why you did it and so on, but I think that would be a fascinating conversation.
I want him to give the edge up. Too much funny stuff going on already. Like, even for you, next week is going to be Loop Plus.
Right. But yeah, I want to commend you guys for the moves and watching on and supporting as always. And yeah, it's a pleasure to be on Market Mondays.
No, thank you, brother. I appreciate that. So let's jump right into it. If anybody doesn't know who John Henry is, I don't know how you don't know who he is, but I'll give you a quick rundown. So John Henry is a superstar entrepreneur. He was a star of a TV show. He had a venture capital firm. He had his own cleaning business when he was like 19 years old, which he sold for $1 million. Angel investor, serial entrepreneur. And now he actually started his own auto insurance company. So he's like a wizard. He's under 30 years old. So
That's scary, bro.
yeah, he's
I can my 20s.
he's a wizard. So
The way we forgot that he actually owns real estate too.
oh yeah, real estate
Don't forget
investor,
that.
big
That's
time
right,
real
that's
estate
right.
investor. So what we're gonna do now is we talk about public markets a lot, but we haven't talked about private markets. And that's a whole part of the financial space. And you can't have a financial show and not talk about private markets. A lot of people might not even know what private markets are. When we talk about angel investing, we talk about venture capital, things of that nature. So I want to have that conversation. I also want to have the insurance conversation. So let's jump right into it. My good brother.
Let's do it.
VC, right? Venture capital. So you were on both sides of venture capital. You were part of a venture capital firm, Harlem Capital, and now you actually received money from venture capital. So you was actually giving out venture capital at one point. Now you have a company where you're actually getting venture capital. So I want to start with, a lot of people might have businesses and they approach even us all the time like, hey, do you know any VC people? I got $1 million idea. I want to pitch it to them, but they don't know the proper process. So what is the process to get venture capital funding?
Copy. Okay, awesome. Yeah, no, it's a great conversation. Let's talk about the private markets. It's very connected to the public markets. A lot of the legacy company, any company that you can buy and sell now, and I appreciate that you guys are constantly breaking down the public market plays. It gives me it gives me like whiplash just following the movement. So I don't have a whole lot of money in the public markets. But any company that was public was at once private, right? Before you are valuable enough such that a bank would underwrite you and bring you to the public in the form of an initial public offering. You have had traversed an entire journey in the private markets, and there is an entire wave of value creation that is historically been limited to the few. So if you thought you had a good deal when you bought Beyond Meat, when you bought Levi's, when you bought Airbnb, imagine the deal that Sequoia got. Imagine the deal that Y Combinator got. Imagine the deal that their homie, by the way, who went to college with the founder and had a look at 5K of Airbnb when they were worth 10 million got when they went public at 100 billion. Right. And so the private markets is, for me, very fascinating because twofold, right? As you mentioned, there's two sides of this table here. It's, hey, can you be a good scout of talent? And unlike in the public markets, you have to elbow your way into conversations, rooms, and you have to have two levels of skill. You have to, one, be able to dynamically spot when you think the team is right, when you think that the opportunity is right, and when you think that the timing is right. And then also you need to even be able to be in the conversation such that an entrepreneur would want to give you a look at their deal. But then there's a couple of other things happening as well, right? So that's on the investor side. And then the side that I love is the side that rolls their sleeves up. And like, one thing I just want to say too, there is an ungodly amount of emphasis placed on the investor these days. The VC, how can I pitch a VC? But like, the VC ain't doing shit, right? Yeah. The founders rolling their sleeves up, creating values, making judgment calls every day, hiring, firing, busting ass, selling, onboarding, building product, evangelizing. The founder, in my opinion, is really the hero, the creator of value. And I think that culturally, somewhere along the line, probably because of TechCrunch and Fast Company place so much emphasis on the investor, we forgot to view the founder as a hero, right? And so those are the two sides of the table going on. It's the founder being bullish on a vision, stubborn on a vision, obsessed with the vision, mobilizing a team around it, and eventually you bring investors into your orbit. And if you're fortunate, like we were at Loop, you can get a little bit of capital, and then you effectively you have your swing at it. So that's what's going on in the private markets. I really love it because it's interlinked to the public markets in a new way and more intimate way than ever before, because a lot of the public companies that are making the biggest waves are all venture funded. You have Robinhood making a splash. Clubhouse will go public, guaranteed. WeWork recently filed for IPO via SPAC. I'm not sure if you guys talked about SPACs. I think it's the craziest racket. But there's a lot of companies now that via a traditional IPO or a SPAC, which is effectively like a way to bypass the traditional IPO diligence requirements and still make it to the public markets. Venture capital is seeing the biggest wave of liquidity that we've ever seen in the industry. So all these investors that had their money tied up in all these bets, they're making money. And guess what? Guess who's not making money? Us, because we never had to look at the deal. So that bugs me, right? Because the majority of the people that made dough and had a look at these companies, came from a handful of zip codes in the Valley. And so Harlem Capital sought to change that and diversify how a capital manager looks like and what we look like. And then we're changing that as founders as well, stepping up to the plate and swinging big.
Quick question for you. When you were looking to distribute capital, what are some of the traits that you were looking for in the entrepreneur that would be an easy, hell yes, I need this company? For me, I look at a founder, I look at economic moats, competitive advantage, but what are some of the things you were looking for when you were like, we have to get this deal pushed through in 2 or 3 weeks?
Yeah, that's a good question. I think people always look for like a easy summary of tips, but The thing that makes venture a lot more difficult is in the public markets, you can base your investment based on the past, right? So you evaluate your investment based on historicals. In venture, you often have no historicals. So it's not about getting a good deal on the past. It's about getting a good discount on the future. And you tell me how you go about summing that up. Sometimes it is because the founder is an X factor. You know, sometimes it's because you're just like, whoa, this person is incredible. Other times you're just like, whoa, the timing for this thing just kind of makes sense right now. And other times you're not completely sure, and there's a thin line between, you know, brilliant and kind of crazy. And so, to be honest, a lot of times when you are making an investment as a VC, you know, there's no way to know for sure, and a lot of times you feel like honestly, it feels like guessing. And here's the thing, though. The reason that the tier one, like 86% of all profits in venture capital went to but 6 firms. And it's no coincidence that those 6 firms have been around for 2 decades, right? It takes 10 years to know if you're good at investing, because that's the average life cycle of these venture companies. And so I can sit here and list a bunch of attributes that I think matter: founder, market size, team, traction, whatever. But in reality, until you've been in the game and taken punches for decades, there's really no way to know. So my advice to founders is go out there and get it how you can.
John, I mean, obviously you were a VC and now you're a founder. And so there are some advantages that you have going into the process of trying to raise funds. I'm wondering, are there things that you learned through the process that you were surprised at? Or it was like, you know what, this game works, I know how it's gonna go. I'm a veteran in this. What are some of those things that you learned in the process?
I love that question, man. I'm glad you asked it. I think that I was surprised at how much of it came down to intangibles, how much of an investor's evaluation of a founder came down to the things that you don't see on the websites, like, you know, this is our criteria, you know, because a lot of times, a lot of deals do check the criteria on the website, you know, 250K in revenue, you know, this, that, whatever. But in reality, a lot of the times, the thing that made investors move was the classic FOMO. And to be honest, I was torn about that, how pervasive that is in venture, right? It's like so much of what makes an investor move is that another investor is moving on it, because there's a lack of fundamentals at the seed stage. Right? Like we raised at a $10 million plus valuation at the seed stage, pre-product, pre-revenue. I come from small business land where, you know, you get a 1x multiple on your revenue. And so, you know, if you're making $1 million, your EBITDA is 250K, and then you get a 4x your EBITDA. And like, that's the world that we come. Venture is completely disconnected from that. So in a world where there is no fundamentals, in a world where you're not sure if this thing's going to flop or if it's going to turn to $1 billion, and more recently, 10s and 20 and $100 billion exits like we've been seeing, you know, I think the code for venture is being rewritten. And I think a lot of it comes down to, God damn it, that motherfucker's persuasive. I'm just going to keep it a buck. Like, it's just like, yo, are you the sharpest motherfucker in the room? And I don't mean like, I mean, actually, bro. Like, when I was on the market, I knew everything cold about my business. There's nothing you could ask me that I wouldn't know, right? I would rehearse the pitches and anticipate when someone could ask me something that would stump me, and have, you know what I'm saying? It's about being tight, sharp, persuasive. You got to know your numbers cold. There's a lot of things going on, but all told, so much of it came down to how much of a powerhouse you could look like and come across as.
John, let me ask you this. The vast majority of people will never have an opportunity to invest in private companies for a variety of different reasons, but that's actually changed a little bit now, because I want to ask you 2 questions. So the first question is, there's sites like Republic, I think there's a few others, where allow you to, it's like, well, you know what Republic is, crowdfunding kind of situation, but you can invest in private companies with the hopes that the companies can blow up. And it's kind of like, you know, the regular persons, from my knowledge, that's like their only real shot at investing in private companies before they become public. How do you feel about those type of sites? And are there any other avenues for regular people to invest in private companies before they become public?
Yeah, it's a good question. I'm a fan of them. I'm a fan of them. I mean, it's not necessarily putting a whole bunch of capital to work. So like if you deploy $500 and you get a, 10x, like it's not really going to change your life. So, but I think it's a good way to dip your toe in the water. I think for anyone that wants to become an angel investor, I would just do it on my own personally, like we did at Harlem Capital, because the real skill set of angel investing is not like putting $500 to work. It's like finding the deal, right? Like finding the deal is the hard part. So for anyone who's interested, yeah, you can, if you want to back a company that's on a platform, I think it's a fantastic way to do it. I think it's a fantastic way to diversify. The angel investing is the most fun way to lose money though, by the way. So I wouldn't be like treating it as like necessarily a space where you're going to generate returns, respectfully to all the startups out there, mine included, right? It's just an incredibly risky asset class. So if you were chasing returns, I personally would and am in real estate. Or, if for a lot of folks on this show are probably in, dividend yielding stocks, some little bit less volatile types of things. But if you want to dip your toe in angel investing, it's a great gateway drug to do that. But if you want to actually angel invest, what I would actually recommend is saving up $2,000, find 5 people that want to do the same thing, and then pulling up a 10K check and trying to get on a cap table yourself.
You did a legendary situation where people think of venture capital as like you go to Stanford and you got to have millions of dollars. You started a venture capital firm, angel investing firm, with you and other colleagues, like you said, with $2,000 a piece, I believe. And the last time we spoke, you had got that $25 million check, for lack of a better word. I don't know how to put that. So, right. John, I want to ask you, man, can you break down the steps of how do you start a venture? You started a venture capital firm with $2,000, and like I said, grew it to having funding of over $25 million. What are the steps? What are the steps, John?
Yeah. It's a good question. The steps are simple, man. I mean, for a lot of people in here, I know some of the people listening have pulled together their monies to go buy a little investment property, right? So it's the same kind of deal. You form a little LLC, you come up with a cool little brand name, right? It could be whatever. It could be EYL Ventures, for example. I'm not saying you guys should get into the business, but maybe you should, because I'm sure you got a lot of people pitching you guys, right? So let's take the 3 of you guys, EYL Ventures. The 3 of you guys, you pool $5K a piece or $2K a piece, 1K P, don't matter, and then you pool that money, and then cool, you got the venture, you got the brand, you got a little bit of capital set aside, right? And if you can't hustle and set aside 2 stacks, then you're not ready for this. But if you can, cool. So now you found people that are driven enough. You have the entity, you have the brand name. Now you got to go find the deal. So this is where reps come into play. Our first deal was like in a cafe, and that cafe closed down within 2 years. So we lost a little bit of bread on that. Okay, cool. No sweat. We went again. We invested in a dental practice. That one had its problems too. And with COVID, even worse. Okay, bet. We made no money on that. Okay, cool. We invested in a media company. We got into Blavity. Ooh, that one had a nice little pop. Okay, cool. And then, we kept making bets. And after you make bets, you start to learn a little bit more about your own investment temperament, about what you like, about what what you feel has a lot of opportunity. And so I'm like you, Rashad. I like to learn by doing. So, I was never a school guy. I left school. I just feel like if you're interested in a category, put a little bit of bread to work, and then, keep putting a little bit more at a time until you build up your knowledge base. And then you can eventually convince folks to trust in your stewardship of their capital.
But if you're brand new, and let's say someone wanted to start tomorrow, how do you find a deal in the Valley, or let's say New York, and they've never done a deal before?
How would I do it? Okay, bet. Let's go through that. I have no brand name. I'm Joe Schmo, right? I want to get into this shit. I put up $2,500. I got 3 other friends that would do the same. We have 10K. We want to do it. Okay. So cool. What would I do? I would go on Twitter and type startups, or go on Twitter and type in raising capital. On Twitter, you can search in or out of hashtag. So literally go on Twitter, look through every motherfucker on that who wrote I'm raising capital, literally go through and say, oh, this looks kind of interesting. Okay, cool. Like the tweet, yo, you might maybe get at me. I would make a list of the top, personally, I would probably make a list of the top Black and brown founders that have already raised venture capital, hit them up and say, yo, do you know anyone in your network? They're usually mentoring some people because, you usually get the tech crunch wave when you raise a round, and then founders reach out to you and say, yo, can you coach me? So, hey, anyone that's raising money, I don't got a whole lot, but I'm down to put a little 10K to work. I can squeeze in there around. I can be competitive. I can move fast. You let me know. Right. And so it's all about these untraditional channels. If events were a thing right now, I'd be doing events. I'd be chatting up every comment that I see right here on the EYL network right now. Greg Thompson Jr., who is a brilliant engineer and co-invested with me on a property, is in here. And he's a very talented engineer. And you guys don't even know who's in the comments.
He's EYL University in the Zoom chat.
He's in the YouTube right now. I'm watching the YouTube comments. I'm watching the Zoom. Like, guys, there's people people are so like fixated on Puffy and Hove and Master P. Shout out Master P. Shout out all those cats. But you're so fixated on who came before that you're forgetting who's right next to you.
Right.
Like the people who are right next to you are going to be your co-founders. Like I was on the Breakfast Hub. Cool. I'm more excited about being on EYL. No disrespect, they came around. It's like I'm more invested in who's coming up right now. So if people would just focus their gaze on who's around instead of who's been ahead, I think that you could unlock a lot of value. You could find your co-founders, you could find investors, you could find peers, you could find anything really.
John, you said that it's risky. It's not for the faint of heart. And I know you talk about being scared in this process, but you're interested because when you feel scared, you feel like that's where you're supposed to be at and you run toward the fear. So can you talk about that a little bit?
Yeah, man. 100%. I just feel strongly about using fear as a compass. A few pivotal moments this time, at this point in my career, I've done the scarier thing. And when you do the scarier thing in your career, it's usually the less certain thing. Is usually the thing that the income isn't guaranteed. But if you're considering doing it at all, it's also usually because it's got your imagination captured. You guys were educators prior. So someone hit me up today and was like, yo, the guys who did EYL used to be my camp counselor. Someone who's on my media team texted me that.
That's crazy. That's crazy.
And so yeah, Terrence, yeah, that's right. So let's look at that for a moment, right? There's a reason there's 7,000 people listening right now. They all have a vision in their head that's varied from what they're presently doing, and they want to nurture this new life. Cool, you could do it on the side, no problem. Eventually, if you're steadfast about nurturing this, you get to a point where you got to make a decision. There was a point where EYL had grown too damn big for you to be, safe in your home. You had to brave the storm, right? And so like when you're faced with that option, what do you do? And consistently what I've decided to do is do the scarier thing. And so for me, that was dropping out of school to start my first business. I'm not necessarily suggesting that. It's just like, that's what I did. For me, that was selling the business. For me, time and again, and most recently it was leaving Harlem Capital. We raised $40 million, bro. I was 26 years old, 26, 27, managing $40 million is everything I ever fought for. But I had to be real with myself that I am not the fund manager type. I'm not the buttoned up type. No disrespect to a massive investor, buttoned up all the way with a tie. But I like to just, I like to wild out on Twitter if I want and not have an LP base, come check me. So anyway, I'm a really big fan for anyone listening. Whatever it is that's capturing your imagination, if you follow it, I promise it's going to be a harder road. But I do also promise that if you give me 24 months locked in, your next 24 months are going to look way different. And I'm really glad for having nurtured the bravery to follow my path, man, because we're not supposed to be here, gents. From where we're not supposed to be here.
Let's dive in. I have 3 questions I need to ask you. So for the entrepreneur, what's a blueprint that you follow to help you get your success? Because there's a lot of conversation about it on Twitter, LinkedIn, but give them the real about how much effort it actually takes to manifest an idea and turn it into something profitable? And then secondly, I want to ask you, you felt like if you had no edge when allocating capital, how much did you put into each deal to make sure you didn't burn through your entire fund?
Copy. So the first question was, what's the edge as an entrepreneur?
Yes, like not the do these 7 things, but the real, how many hours you work, how many people you reach out to, marketing, press. What are some of those things that you've done? Because I can feel the passion.
Copy. Yeah. So I love this. People reach out all the time and say, yo, how do you get press? I'm like, yo, do some shit that matters. That's how you get press. Like the reason you're not getting press, the reason you're not getting coverage is because you're not doing anything that's emotionally resonant to people. People swear that there's a fucking formula that you can, and if you have just the right call to action and just the right copy that you can trick someone into buying, yeah, cool. You'll get a few suckers, but that's not how you build a business. So in my opinion, and what I followed is you start with a really resonant mission. Mission opens doors that profit can't. And there's a way for you to align yourself with mission within your respective business. EYL has a broader mission about mobilizing the community that is expressed through a media platform. If you're in cosmetics, you can tap into a mission of highlighting African beauty, for example. And so now we're talking about brand building. It's less so about the product per se. Like at Loop, we sell insurance, but really it's about the guts beneath it. And when you do that, you can mobilize the press to write about you. You can mobilize people to join you, investors to join, and so on. So that's my high level takeaway. Practically, what I would say for anyone who's interested in like getting coverage or whatever, go and Google a competitor of yours. There's a tool called a backlink monitor. You can go to backlinkmonitor.com, for example, and you can type in your competitor's website, and any one of those tools will show you any other website that's pointing to their website. So if someone had written about them on Forbes or on a blog or they're running ads, you'll be able to see all their web activity pointing back to them. So what I would do then is if I find an article from Wall Street Journal, I would click on the article, read it, find the author, type their name onto Twitter. They're usually on Twitter, and tweet at them and say, yo, I really loved this piece. We're doing something similar at insert company name. Maybe we can connect connect offline about this. And if you do that for 100 writers, you should be able to get a few people to pick you up. That's exactly what I did. And, people will hear this blueprint and won't execute on it. But then you will go hire a PR firm who will underdeliver, when in reality, you could just do it for, a few hours a night. If you do it, you'll be, it'll get you all the press coverage that you need.
Yeah, man. John always drops the gems, man. Walked away from 40 million and when it's not like he had 40, but I'm saying the company, when y'all got that money and then like a week later he left, I'm like, what is he doing? That's crazy, man.
That's the crazy part. As soon as you left, I text you. I'm like,
you did.
I know you're gonna do something big. Congratulations.
Yeah.
You did. I remember that.
I want to talk about the insurance, but before, I just got one last question about VC. I remember last time we spoke to you about VC, you said 80% of MMA is happening between 150 and 200 million price point, and it's mostly on the coast, New York and California. So it's crazy because, like, I want you just to kind of explain that, because I think we just got to think, even if we're not at that level yet, we got to think broader range. Yeah. And just a lot of times we think like $50,000 or $10,000 is real money, $100,000 or even $1 million. Like the average deal is between 150 and 200 million. So talk about that a little bit.
Yeah, I mean, for sure, because I think the reason that statistic is true is because, it skews towards, the average skews larger because, the larger transactions move, they're so much larger than the small ones. But also shit that's worth buying is usually big. Right. And so if you're talking about selling a business, like if the business is too nascent, like I couldn't sell Loop right now. No one would want to buy it from me. It's got a little bit of buzz, but all I got is like a Google Drive full of notes. You know what I'm saying? Like usually by the time you get to the point where you're transacting and you're unloading or acquiring a business, or in the master investor's case, teaching you all about which stocks to buy, it's a mature company. with robust processes and so on. And so I really am a fan of building, intrinsic value and locking in and building for 7, 8, 9, 10 years. I really feel like if you start a company, if you're fortunate, it is going to be a 10-year ride at a minimum. So if you can't see yourself doing something for minimum of 10 years, I wouldn't start it personally. And by the way, I know that there's going to be some people that listen and say, well, I just came across this ClickFunnels thing. I'm thinking I could do a little quick hack here. That's fine, man. But like, yo, your time is precious, my G. And like for you to invest in something because you feel like you can, that's not how I measure my time. Like I want to do shit that lights me up. I'm ready to rock. I'm going to put my all into it. And people can tell when you do that. And that to me is a winning formula, a lot more so than doing something quick for the cash. So anyway, when entrepreneurs do lock in around that with that kind of attitude on a venture for 10 years, that's when the entities grow in value. And when you have repeatable processes that can run without you, that's when the valuations start to get very interesting. And once you grow to a certain tier, your business is valued based on a multiple of your revenue, right? So in the insurance industry, for example, your business is valued at 13x your revenue. So let's dissect this for a moment, right? If you grow a business if I grow Loop to be $10 million of revenue, which I do anticipate I should do within a couple of years, then a 13x multiple, that's $130 million valuation. Now, would I take that if someone said, yo, come and buy this? We're going to buy this for 130. This sounds like a lot of money. It is a lot of money, but my VCs didn't sign up for a 130. And also consider the fact that I sold a good chunk of the business, right, to my seed investors. So I sold a chunk to them. I gave a chunk to my employees. And so now I got to think, damn, by the time I build it to 10 million of revenue and is worth 130, if I cash out here, that's cool. But like you're usually growing at a decent rate. So you say, you know what, let me rock out for a little bit longer and see if I get this bad boy to 50 million. Once you're at 50 million in revenue, if you multiply that by 13x, so you guys start to see, so you start to see why the windows, why they get to what they get to. But quickly, let me just break down some multiple valuations for some other industries. If you're in media, as you guys are, is usually 3x your revenue. So whatever your revenue is, you multiply it by 3x. If you don't like what that brings you to EYL, as a lot of founders don't when we're early, we say, nah, I'm gonna build this up until I can get the number that I want to have, right? And so if you're at 500K in revenue, 3x that is 1.5 million. Would you sell it for one? Would you Earn Your Leisure for 1.5? Again, a lot of money, but a lot of value to unlock. Now, if you grew EYL to 5 million in revenue and then they offer you 15 mil, okay, more reasonable, but I still think there's a lot more than that. Right. And so that's the founder's dilemma, right? If you're in cosmetics, it's also a 3x. If you're in AI, get this, by the way, if you're in AI or data or some shit like that, 25x.
What about education?
6. So you 6x, 6 to 8x.
Get a list of this because I think this is really important for entrepreneurs because I feel like a lot of entrepreneurs jump into a business and don't know what the outcome could be. Please tell them where they can research.
Yo, that's a good question. Let me search around. I know this shit cold just from like.
This from we
brought the plug.
You got it. Either you got it or you got it. Man. Like this apple from the apple orchard. So John, man, that EYL valuation in 5 years is a serious thing.
That's so. But to your question, Rashad, like that's why the average M&A, mergers and acquisition activity, gets to that range, because it's not like that you got 100 million in revenue. It's that you got revenue of X amount, and then based on the industry, and you're getting the multiple. Now get this for a moment, if I could just riff for a second. So whenever you're in technology, remember I said AI is a 25x. I'm in insurance, that's a 13x, but I'm an AI driven insurance company. So now you can get a blended multiple. I might not be able to get a 25x, but I'm a motherfucking salesman. So when it's time to sell Loop And if we're at, let's say 50 million in revenue and they're trying to give me a 13x, I'm gonna say, yo, but we got a lot of data. We got this, we got that. I'm holding out for, it's like Hope says, he's like, they talking 250. I'm holding out. I'm holding out for 275. I just might agree. So it's all subjective. I want people to understand that valuation is really all subjective. Is based on what you could reasonably defend, and is based on market comps. So, you know what I'm saying? Like, I think Earn Your Leisure can command a multiple, because I don't think that you guys should be a pure 3x, because you have a lot of intangibles and a lot of brand that you can stretch and make it a 5x, for example. So evaluation is subjective, man. I thought it was a really great question. I hope that people understand this is the underpinnings of venture, for example, which then grows up into public markets. In venture, when I was raising my round, I came with a valuation. I came up with an aggressive one. And they said, well, why? And I said, because I'm a G, and because my co-founder is strong, and because we have this, we have that. And so it all depends on what you could sell. If you could sell it, great. If you can't, you got to adjust.
John, how old are you, John?
28. I turned 28 in January.
28. Yeah, happy birthday. So
thank you.
When I first met John, the first time I was like, what books do you recommend? He was like, I don't even fuck with books. I'll be honest with you. He was like, I know, like, but I say some people just got God-given ability to just, like, you know what I'm saying? Like, sometimes in life you're just a brilliant person. Like, you know what I'm saying? And it's like,
wow, I appreciate that, fellas. Damn.
What you actually like, where to get this from? He's the source. Like, you know what I'm saying? Yeah, follow him. Watch the podcast episodes. Watch his podcast. He got a podcast. Like, sometimes you just can't learn stuff in books. Like, even me, like, you might ask me a question about social media, and it's like, what resources? I had to figure it out on my own. Yeah. The only way I can really tell you is if I can actually verbally tell you, I can show you. I can't tell you a resource to how to grow your social media following, because I'd have had no resource.
There was no book for that.
Mm-hmm.
We had to figure it out.
Yeah.
Mm-hmm.
When you were deploying capital, what was the exit you were looking to get? Because of course, when you invest in, let's say 20 companies, maybe 2 would give you the return that you need when the other ones fail. Were you looking for 50x?
Yeah, 100%. I could dive into this. I don't know how many people here are like super in the weeds on venture capital, but effectively, I'll break it down this way. So when you, for Loop, for example, and a lot of seed companies out there, if you are truly pursuing venture, I don't mean like you got a restaurant and you think you want to be venture. I mean like if you're truly, for those listening, if you really want to go into venture and you want the understanding of like the seed market today, because it will change in a year. It changes every year, more or less. But you should give up about 20 to 25% of your company, right? And the valuation on average will be between 4 to 10 million. 10 million is the higher end if you are a stronger multi-time founder, whatever. 4 million is the nascent end. And you should be looking to raise. I know it sounds preposterous, but like, the seed rounds are growing. Like, we closed on a $3.25 million seed round. That was a jumbo seed back in the day. And I came out like, yeah, I got it. And then I've been watching all these announcements, 3, 4, 5. I was like, damn, okay, the seed rounds are growing a little bit. So if you're a founder, aim to give up about 20 to 25% of your business, value your business anywhere from 4 to 10. How do you make that valuation? You make it up based on comparables in the market. If you're in beauty, I would research a bunch of beauty businesses that maybe the last 3 to 5 transactions to close and try to back into what their valuation was, call them, ask them, figure it out. And then as an investor, if you make 10 investments, 5 are going belly up, 0. 3 of them made you a 1x. So now you're negative because you made a 1x on those deals, but you lost on 5. One of them will have a modest little 10x. So now you've broken, after 9 deals, now you've broken even. So congratulations. You just have literally broken even. But then venture is an outliers business. Recently, the guys at Harlem Capital hit me up because I'm no longer in the fund, but I still have my ownership in Fund 1. And they were like, yo, we got an exit. I was like, yeah, boy, what is it? And it was like, modest exit. So venture is an outliers business where, you just have to consistently seed entrepreneurs and working on things that you really believe in and do that consistently over time. If you make one-off angel investment, you will lose your money. I would not recommend getting into angel investing unless you're going to take a position and do it consistently over time and make 3 bets a year, let's say for 5 years. And then, you know, to your question, man, who knows? Did Robinhood seed investors know that they were going to pop off? You know, everyone says that they look for a multiple, but in reality, bet because you believe strongly in the founder and the opportunity, and then let the multiples, you know, shake out the way they do. That's my opinion.
Now, you said that Loop is a insurance and AI company.
Yes.
And you got a unique way of tracking people and granting insurance based on the way they drive. So I'm wondering, are there specific software companies and technology companies that you guys have worked with for the AI, or is it like proprietary software that you're using?
Great question. And quickly, I appreciate all the comments. I have it here off to the side. I'm watching them. I appreciate you guys, man. Just a tight knit community. You guys built something special. Antonio, Prudent Mom, Ruel Black, Patrick Payton, Peace Music, Bird Lynn. You know, people like shout out sometimes. Appreciate you guys. Okay. Okay. So.
She's loyal. She's loyal.
That's what's up. That's what's up. Noemi, I see you guys. Jay Turner, Shazam. Okay, bet. So now, explain Loop. People saying explain Loop. All right, bet. So listen. Long story short is insurance is racist. Okay. I don't mean to sound alarmist, but here's the thing. You are priced based on your demographic data, right? And by the way, in the 1960s, when we couldn't get FHA loans, and I'm sure you guys have covered that here, but it's like FHA loan is like when you can buy a house for 3% down. But in the 1960s, famously, blacks were excluded from that, which, by the way, that was the #1 driver of wealth in this country for a lot of white folks. We were systematically excluded from that. And people point to the banks, but it wasn't the banks. The banks wouldn't loan because the insurance companies wouldn't insure certain zip codes. So that was like the history of redlining, right? So when you look at it, it's like insurance was really the silent culprit. Insurance companies, insurance backstops trillions of dollars of activity. You can't get a whip without insurance. You can't get a loan without insurance. I'm in one of my investment properties right now. I couldn't, you know, I'm in the middle of selling a building, and what they were running title today. Hey, who's your insurance company? Everyone wants to be insured. All right. So this is really like the underpinning of a lot of society. And when you peel the curtains back and you see your price based on your income, your credit score, where you went to school, and what you do for work, which has nothing to do with how you drive. It's got nothing to do with a lot of things, man. And so when I took a look at that, I was like, well, so what's the impact of that? Because I know, I grew up in a very poor household. So like my mom, is lower education, lower income, didn't go to school. So what does that mean? It means that communities of color are paying sometimes 2 times as much as upper middle class white person. In fact, so I was speaking with my head of insurance today. If you are an upper middle class person that graduated college, but has a DUI and has speeding violations, you get a better price than someone who's low income and bad credit, but a safe driver. Bro, isn't that America in a nutshell? If you're privileged, went to college, but have a DUI and mad speeding, you get a better price than someone who's poor just because they're poor. Someone who's coming up doing their thing. So what happens is in insurance, there are some people that get excellent rates, but then here's the thing. Their great rates are subsidized by people that are put on the opposite end of the spectrum, and unfairly so. So at Loop, what we're doing is like, bro, I'm locked in on this, bro. I was passionate. I did not want to start a brokerage company. I didn't want to create a cool little website that then sold you State Farm. I wanted to create a vertically integrated insurance company, soup to nuts, control the experience, ensure you're being insured by Loop, control the underwriting, control the policy administration, control everything, right? Because I feel like, how could we expect a system that wasn't built by us to consider the impact that it has on us? So anyway, so Loop, what we do, we have removed all of these things from our policy. We've removed credit. We don't look at what you work. what you do for work. We don't look at your education. We don't look at your income. We measure only what matters, which is how you drive and where you drive. And we believe that those are the only two things that really should go into your price. And the byproduct is a lot more equitable insurance for our communities. So for all you guys watching, man, I mean, they're saying drop the link. I'm going to drop it right here. It's loopinsure.co.
Text it to me, John. I'll put it in YouTube also.
Bet.
John, what you said is so true, and it's crazy because nobody really ever thinks about insurance like that. And insurance is probably one of the biggest businesses in the world. Warren Buffett has an insurance company.
Mm-hmm.
People don't even realize like insurance is crazy. So can you talk about the business of insurance? Because from my understanding,
Love it.
talk about on the Breakfast Club where they get paid up front and they invest the money in like bonds. And that's why they take a long time to pay you out, because your insurance premiums are actually getting invested. And that's true whether it's life insurance. I've worked in the financial services industries for years, so I understand that that's how life insurance works. It's like they're investing your money, which is not necessarily a bad thing, but I think it's important for people to understand the business of insurance.
That's a great call, man. So, Warren Buffett's portfolio at Berkshire Hathaway was made cohesive by the acquisition of Geico. There's a reason that he bought Geico, right?
Tyler,
it's
please.
not because of the fucking gecko, right? It's because insurance is a very, very cash-rich business. Because think about it, guys. Insurance is a regressive tax. You're paying for the service ahead of any incident happening, and the incident may never happen. So everyone, think about this at scale now. Everyone is paying into the pot, right? So what you have is a very cash-rich business. Now, you have responsibilities as an insurer. You have to pay out claims when they happen and so on. And it's coming from a collective pot. But guess what? There's a float. There's a time between when you get paid, when the insurance company gets paid, and then if God forbid anything happens when they pay you out. And so what Warren Buffett does, you have this enormous balance sheet of a lot of free cash flow. And the majority of an insurance company's profits come from invested premiums, not from underwriting, not because they're such good selectors of risk and they price you so well that they make a lot of money from the same amount that went in and versus goes out. They collect all the cash and then they invest it, which is a smart business play. I'm not knocking it. I'm just saying that it makes you adverse to the customer. If you're incentivized to invest the premium and make money on that for as long as it's out, then you're going to want to be slow on paying the claims. And so anyway, so that's what it is. If effectively, insurance is a giant bank, right? Insurance companies are giant banks. And guess what? They're faceless. There's a reason that they invest so much in mascots and ridiculous humor. And I don't know if you guys saw the Super Bowl yesterday, just like ridiculous commercials, right? Because they just have to imprint themselves in your head and systematically indoctrinate you with, when it comes time to make the decision, think of us. And so at Loop, man, like this ties in perfectly to what we were talking about before, to venture capital. Like I can't think of a category where people actively dislike their insurers. I mean, I went on Twitter and I typed in car insurance and someone wrote "fuck car insurance" in all caps. I'm like, no one does that about their cafes. Like no one feels that way about any category. And so anyway, just to tie it all up, it's like, I feel really passionate that this is insurance has gone by largely untouched, man. And shout out Killer Mike, who's doing something in financial services, in banking, but that's the sexier cousin. Insurance is a beast. It's complex, it's regulated, it's difficult, it's capital intensive. And as a result, by the way, for those listening, I had a really hard time on the venture capital trail, even though it's not my first rodeo, because people are like, yo, you sure you want to do this? This shit is difficult. I don't know if insurance, a lot of people of color, like, what about your fraud? Like people had shit to say. And that's when I knew that this was something worth doing, man. I think that building a community first brand that's rooted deeply in the people and that is just more equitable is going to be really powerful.
Who's eligible for the insurance? Like, is there an age demographic that is eligible for it?
Yeah. So 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 insurance is regulated on a state by state level, right? So if it was federal, it'd be easy. I get approved federally, and I'm available everywhere. But Loop is insurance is regulated on a state by state level, which makes it more complex because then you have state insurance commissioners and you have, different regulatory bodies and so on. So we had to pick selectively which market are we going to go in first, and then which ones we're going to seek approval in afterwards. So the first market we're going live in is Texas. Gargantuan market. It's one of the biggest auto markets in the country, right? Biggest state, biggest population, 28 million people living there. A lot of communities of color. Dallas, Houston, Austin, what's up? El Paso, Rio Grande. I'm moving to Texas, by the way. I just don't like doing shit from a distance. I'm rolling my fucking sleeves up. I'm moving to Texas. I'm moving to Austin.
Everybody leaving New York.
What part of Texas are you moving to?
I'm moving to Austin, right next to Elon Musk. What's good, baby? So we'll be live in Texas. Then we're going to be in Illinois, Pennsylvania, Ohio, New York. We're coming, guys, state by state. But listen, I really need the community support on this. We're venturing to do something that just has not been touched in decades. So if you guys could go to loopinsure.co and just join that wait list, that is such a huge help to us. It helps build our momentum. It helps build our community, our audience. I see people right here. I live in Houston. I just joined the wait list. I appreciate you guys. It's going to take a million-man army, and woman army, but we're ready for it.
Insurance was ripe for disruption, if you will. When you were going through your stack for how to build a competitive advantage, what were the things you were looking at and the weaknesses that you saw that would give you an edge? And as a follow-up, in this era, do you think it's an asset or a liability to be an African-American entrepreneur in this era?
Ooh, good questions. So yeah, great question, right? Because before you had asked me that in isolation, right? You said, what are the things that you look for, right? Now we've contextualized it around an opportunity. So it's a little bit easier to dissect because every situation is different. So in this particular case, I saw, what are the downsides? A lot of fucking competition. Like you said, competition, it's not, it's a little scary. So I'm like, all right, cool. Takes a lot of money, a lot of established incumbents. Damn. All right, bet. Okay. So what are the upsides? I looked and I saw a lot of active, either apathy or distaste for this. So sometimes a large space could feel intimidating because there's a lot of competitors. But if you look at the underlying sentiments, if you feel that there's room for the consumer to gravitate towards your brand because you can do it differently, then that to me starts to get interesting. And another thing that I look for is, am I willing to go to the mat for this? Like, I'm not selling auto because I love like auto insurance. Like, I love the idea of the fact that this is an underpinning of our society that's been overlooked and it's really, really impacting communities of color and no one's addressing it. And so if you can combine a really deep passion, a really strong why for doing it, and you feel like there's room to do it differently, then the other consideration is like, all right, bet. Well, shit, it's one thing to have a fluffy brand. It's another thing to have like, differentiated way of in insurance's case, you have to have a lot of sophistication around underwriting and things of that nature. So my co-founder was able to help there, but yeah, guys, in any business that you guys are working on right now, the strong why, I really go back to that. I know a lot of people lead with numbers and they say, don't let your heart get to your head. I say the opposite, man. Don't let your head get to your heart. That's just how I roll, man. Like for me, you're going to be pitching at your best when you're on fire. So if you're on fire about the opportunity, bet. If you feel like there's a void, right? Like there's a million podcasts, guys, but you still did it because there was a void. There was something in the market that you didn't feel was being satiated and you found your niche, you found your community. So if you feel like there's room, then there's room. And then lastly, you got to back into the skills that you're going to need for it. So for example, in order to build an insurance carrier, you need strong marketing chops and you need strong underwriting chops. So if you have the why and you feel like there's room, then you got to build the team that has the core skills that you're going to need in-house. I'll tell you this, if you are outsourcing a core competency So in other words, if you have a core skill that you need to build a business, right? And you know it's core, if you outsource that, you're fucked. You're very vulnerable. You need to bring the things that are core in-house. Anytime you can do that, you're strengthening your probability of succeeding.
You know what? And it's like a lot of times we gotta appreciate the moment. We was shout out to Spectacular. We was with him in Miami, and we had a conversation. And at the end of the conversation, we talked for like an hour, and he was like, "Yo, y'all should have cameras rolling at all times." And I'm like, "Yeah, it's documentary." And I'm like, you know, this is history. Like this conversation is history. Like we live in history. So it's like a lot of times people don't fully appreciate things until the moment is over. So like when you see John Henry 10 years from now, and he's like
A billionaire.
You
Yeah.
know what I'm saying? You see EYL with that $500 million valuation.
Let's go.
It's like this is you're watching history.
Fact.
It's Black history.
We are Black history. Yeah.
American history.
No month needed. Every day.
Wow. Yo, and it's Black History Month. Damn, I didn't even think about that. I think that's a great point, Rashad. And it touches on what we were talking about earlier. Like, I have a lot of respect for the greats, man. They paved they paved the way and they opened doors for us. And I really wish that people would actively look around at who's around right now and realize that, you know, we're creating the future. And it's across categories. And that's also one of the reasons why I did feel strongly about the insurance thing. For example, just because, yo, this is not a talking point. Like, it's for real. Like when that George Floyd shit happened, bro, I get chills thinking about it. Cause I was like, damn, we got to stop waiting on these systems to be fit. Like, I felt like these systems would be fixed for us. Like, yeah, surely someone would, surely someone would go and go fix it. But it's not, bro. They have their foot on our necks. And I don't mean like white people. I just mean like in general, the way these systems have been built have their foot on our necks. And I feel like we got like, no one's going to do that shit for the 7,000 people listening right now. Like whatever vision it is that you have in your head that you feel like could be done different, guess what? It's not going to be done different by someone else unless you step up and do it. And it might be done by a competitor in a similar way, but it would never be done the exact way that you have in your head. So that to me was just like a shockwave, man. When I seen that shit happen, I was like, yo, there's not even any time to swing small. Like, we got to swing big, man. We need structural change. So anyway, I resonate
crazy.
with that.
I woke up just yesterday morning, and a shout out to my bro Neil Davis. He had hit me. He's great with acronyms, and he was just like, "Yo, now is the moment. Like, no opportunities wasted. Do it now, right?" And so, like, you're doing that. Obviously, we did that with EYL, but there's plenty of people. Shout out to all the earners in here that are just on that fence. Like, yo, just take the imperfect action and do it. It's gonna be your way. It'll be different, but it adds to the community, man. So, John Henry is that guy. He is a living legend, man, and we're happy to be a part of this journey with you, bro.
Thank you, man. I appreciate that. And I'll just some parting words. My lead investor, when I jumped on a first call with him after he invested, he was like, yo, don't be scared to spend the money. He said, the bet is now. He said, I didn't invest in Loop for 2023. He said, the bet is now. Like guys, I want people to palpably understand, whether you're in private markets doing a side hustle, whether you're in the public markets change. There is no, like, this is the first year ever after Corona, after COVID. There is no year ever there's no blueprint for this year. like literally COVID was so fundamental that it's like the birth of Christ. And like, I don't mean to be blasphemous, but I mean, like, you know how we have BC, AD, like it's like before Corona, after Corona. It's fundamental. Business will never be the same. Markets will never be the same. There's a whole wave of opportunity right now that's uncharted. And I really feel strongly that, markets change, guys. Like, these opportunities, there's always going to be opportunities, but the opportunities that exist today are not going to be around in the next year. So make that move, guys. Make that move. Buy, whatever EYL courses out there. Buy whatever stock you feel you need to buy. Do what you got to do, fellas and ladies listening. But don't sit on your ass. Do anything but that. you know, and I'm not concerned with this community, but yeah, man, appreciate being on with you guys, man. For sure. The movement is now.
Thank you, bro. Yeah. Well, one final question before we wrap up. Can you give all the entrepreneurs listening a piece of advice that is actionable, but that it is not fluff? So not like,
Sure. Not like mission, you know, like follow
not
your
like-
fucking heart. Yeah.
because it's like it's information that is sold in for books, and then there's actually the real information behind the scenes that we have to do on a daily. And I want to break that paradigm. Can you tell them something that you would have wanted to know at 22 or 23 to maybe help you get here faster?
Yeah. So it's a great question. And for me, man, the value of being a practitioner has been amazing. So for example, like I'm shocked at the amount of people that have an opinion formed around something that they've never done. like, you know, people will say, yo, you know, don't use LinkedIn ads. I bet you never ran a LinkedIn ad in your life. Right. Like for me, the actual value of being a practitioner is like, you would be shocked at the amount of people that don't actually, you know, I don't know what the verb is, but like practitioner, like try something, right? Just try it. So for example, like with Facebook ads, guys, do you realize that right now still you get charged 1 cent per impression? Yeah. If anyone here, because you had asked for advice for entrepreneurs or stocks or whatever, if you take your cosmetics business, take your media business, take your t-shirt business and shoot a video, 1 cent per impression, you could put $10 behind it. And you can get thousands of eyeballs for that t-shirt. You know, how many doors would you have to knock on to get the same kind of attention? So for me, I really feel like we are in a unique market environment where there's a lot more emphasis placed on brand than ever before. So whatever you have at your disposal to build your brand, I highly would recommend investing in the development of your brand. Not necessarily your product, although I believe in that. Not necessarily in sales, although I believe in that. It's the infusion of your why into what you sell is brand. And to the extent that you can nurture and develop your brand and storytell around it and invest in content, like guys, that's made for me all the difference. You know, the fact that when I step into a room, there's context already. There's no small talk. They're familiar with the journey. We can get right down to it. You know what I mean? That I think is a unique opportunity to this generation. And I think that for anyone listening, you will never go wrong investing in development of your brand because it follows you everywhere from project to project. So that's what I have for folks. For anyone listening, thank you. Thank you so much for listening. I really appreciate it. It means a lot. Man, I've been doing this for a long time and just been given without asking for anything. And I'm cashing in right now. If I've brought you any value whatsoever, if you go to loopinshore.co and you just join the wait list, that would mean a lot to me. But thank you guys. I'm looking forward to transforming industries. I'm looking forward to growing with you guys. You guys are doing very, very special stuff, man. Shout out to the platform.
Your social media handles and all of that stuff. Let them know that before you leave as well.
100%. It's at John Henry Style. So John Henry Style. Follow me on Instagram. That's my main channel. I'm also on Twitter. I'm also on LinkedIn. You can catch me anywhere.
How can we invest?
How can you invest?
In Loop.
In Loop. So I have a fun thing that we're gonna do. We're gonna go right back out to the markets and raise another $20 million is my goal sometime this year. And I am gonna open a small tranche for the community. And so it ties it into the crowdfunding piece. How dope is this, right? How dope is it for an insurance company to open up a tranche and say, yo, not only could you be insured, but you could own this shit. And by the way, I'm not talking about owning Berkshire Hathaway shares when they're, worth, $250 billion. I'm talking about buying shares on the ground floor. And as we grow as a community, as the company grows, like your guys your guys' shares grow and the value grows. Like that to me is such a powerful thing. Like the idea of, like, we're going to turn this shit on its head, yo. Like, I think that insurance slept on communities of color for too long, and we're going to build a business in their blind spots. The same people that they overestimated, that they underinsured, and that they overpriced is going to be the same reason why we get to $1 billion valuation within a few years time. So
We got some money in.
Yeah, it's done.
He gonna be on the
let's
Forbes.
go.
He's already on the
And then he gonna be in
Forbes
Atlanta. They're gonna be like, y'all invest in Luke?
Fellas, thank you guys so much. Hey, I have a question for you guys real quick. Man, I'm just super curious to know, like, can you guys share a little bit of a preview of like what's a business move that you guys have been considering, that, you know, one that you can share that might be on the roadmap? You know, I love the media business, man. Like, you know, I'm not in it at the moment, but like I love dissecting you guys' moves from afar. Can you talk about one business move that you guys are cooking up, some strategic element? Are you looking at acquiring a media property? Are you look like what? Tell me what you guys are thinking about that you can share.
Appreciate that. I appreciate that. EYL Network is pumping. We talked about that before the last time you was on the 100th episode. And that's something that, you know, it's like one thing that, all right, we got a cool show and people like it, but we developed great relationships with a lot of great people. And, you know, we felt like we can help other people develop their shows and give creators a voice. That's the hardest. The hardest part is to get somebody to listen to you. Once you get somebody to listen to you, if you got something to say, that's the easy part. The hardest part is how do people know who you are when there's a million people out there in the world that's everybody's talking. So EYL Network is something that it's up and running right now, bro. It's we're looking to have 3 shows in the top 100 by the end of next week, God willing.
Yes.
No, I'm talking about EYL Network.
Oh,
So 3 shows in the top. We got 2 shows right now. We're gonna have 3 shows. So shout out to Dave Shan, shout out to Sleep Social Proof Podcast, shout out to Ash Cash, Inside the Vault, and of course Market Monday. So just like how you said, as far as just growing laterally, looking at those valuations and, you know, looking at you know, ad dollars from corporations and giving them too much. So you know, that's what we focused on, bro.
Yo, one thing too. Go ahead, Troy.
The blueprint's been laid. We just found it and added our spice to it. So if you
I love
watch
it, man.
the space, like we watch the space, it's like, all right, we can do that. We're gonna add our spice to it. EYL Network is the move.
Yo, one thing too, just while we're on the media business, because I love it. So interestingly, a lot of the IP that went into that developed movies came from books before, but now it's actually podcasts. And so this is like one insight that I have because I used to host for Gimlet Media, which was acquired by Spotify. But a lot of their podcasts were becoming IPs that were being syndicated into films and television shows. I'm sure you guys have come across that. So interestingly, EYL could be in a position not only to like mobilize creators and give these folks a voice, but just also incubating IP with shared ownership that could then be licensed and distributed across different networks and different formats. It's a very, very, very powerful thing that you guys are sitting on. And by the way, speaking on multiples, when you get into the IP business, now we're talking 18x valuations, by the way. So you guys moving laterally like that, that's how you guys are able to get those blended multiples. And that's why we said EYL is never going to be a 3x, you know, multiple, because, you know, you got those blends going on. So
what was the 18%? What was the 18 multiple?
It's an 18x for IP libraries trade at 18x.
Yep.
So
what about consumer facing tech?
What about what?
The multiple for consumer facing tech.
Consumer is a high multiple, man. Consumer's bananas. Like there's a reason why a lot of the unicorns in technology are consumer. Robinhood, Oscar, Lemonade, you know, like because the valuations are bananas and the market potential is gargantuan. The tough thing is the competition, but the way you solve for that is creating beautiful brand, which is why I think consumer fintech, like Loop, for example, if you compare segmentation, brand, and you got
a nice Venn diagram
and tech. Yo, I could talk about all this shit all day, fellas. So be easy, fellas. Appreciate you guys. Can't wait to be back on, man. Let me just say the word and I'm in here.
Got you, bro.
Thank you.
Last thing. To anyone who's in Texas, I want to do a Texas takeover, man. I don't know how your governor is on the COVID shit. I think we will respect, of course, the health and safety protocols, but man, we were this close to all the listeners to doing a takeover in Philly with EYL. It was me, it was Ani, it was EY. Like, yo, we had it lined up and it fell through. But I'm seeing that
Ian lives in Houston. Did you know that?
Oh, I didn't know that.
Yeah, I could drive a few thousand people your way easily.
Yo,
So,
yo, I say that we need to do an activation in Texas, and I still got Cadillac support, so we could Cadillac brand it, blow it up, turn it into a live podcast, whatever, right? Like do a dinner format or an interview format, socially distanced with the crowd in the back, and we could do it in Houston, we could do it in Dallas. We could, Austin's a little white, but we could definitely do it in Houston and Dallas and just rock out. But I wanted to sprinkle that out there and just throw it in the universe because I'm sure that's in the cards for us.
Let's do it.
I appreciate you, man. Amazing.
All right, brother.
Be
Appreciate
well.
you, bro.
Peace. Thanks for having me on.
No problem, bro. John Henry, legend himself. Yeah,
There are a lot of gems inside the gems that you guys need to write down.
yeah, John Henry, man. Always.
Every time he speaks, I learn something. Man. It's crazy because you can talk to him on the phone, you talk to him through text, it never changes. You're gonna learn something.
Yeah. So, we got Ian here. You want to do a couple questions? We didn't get a chance to do questions.
Yo, I didn't even gotta do the earnings real quick, Ian.
Yeah,
There's a few earnings
Yeah,
that are on my radar that obviously people are probably interested in and aware of. So tomorrow after closing, we got Twitter reporting, Lyft reporting, and Wednesday after closing, we have Uber reporting. And then Thursday, one of my big time on my list, Disney's reporting. You know I love Disney.
Disney's gonna be good.
Oh man, I'm waiting for them to get to a number that I want to enter at, but I might have to reevaluate my numbers actually. So Disney's reporting and Datadog's reporting. So shout out to everybody that was in Datadog. I was talking about Datadog in June. Shout out to all my people in Atlanta that listen to the Datadog information and saw some great returns on that. So they're reporting too. So that's in the cloud computing space.
Disney 164, not bad.
I know it got out to 188 today.
Yeah.
And I was like, oh,
Yeah.
it's running away from me. But
Yeah.
we reevaluate the numbers. We're getting in there. I will be in Disney. I'm saying that. I will personally be in Disney. Yeah, it's just about a matter of time.
You want to drop your gem on defense, or you want to wait till next week?
Let's wait till next week because I want to just try to give a couple since we got you here in the flesh. I wanted if we can get a couple questions in.
Oh yeah. I got you.
John, that was a legendary
yeah.
situation. So we got to give him as much time as he needs to talk. So
Support the brother.
My bro Mike, what's going on? Unmute yourself. You've been unmuted.
Yo, what's up, y'all? Hey, okay, so I had a list. This podcast was crazy. I had a list of questions. So, but I'm about to go back to what Ian did. So you said only pick a number of trades. Is that only for futures and options, or is it for all stock?
It's for everything that's just short term.
Everything that's short term?
Yeah, anything short term. So anything that you're holding for less than a year, go and look and see if you cut the number of trades in half, how much better you would have done and what the percentage difference will be. Brokers know. There's like, if you blow your account and you get margin call, they can stop you from trading. It would be in their best interest to potentially cut off your trades if you draw down 10%, but they don't do it because they know if you lose, you're going to double down and put more money back into it. So it's like you going across the toll road 10 times. If you cut your trades in half, you'll perform a hell of a lot better.
Okay, thank you.
Appreciate you, Mike.
Appreciate you, bro.
Let's go to Juan. Juan Castro. Unmute yourself. You've been unmuted. What's going on?
What's going on, fellas?
Everything
How are you
good?
guys?
Good.
Bro, so I'm faced with a pretty interesting scenario right now. I'm 22, just graduated this past summer from Baruch. Shout out to John Henry. My question was actually a little entrepreneurial based as well. But basically, I've been in crypto since like 2017. It was my first experience with investing. And up until like recently, it's been getting pretty crazy. So like I currently work for a big bank from New York, but moved to Dallas over the summer. So basically, I have like a good amount of like money that has grown over the years, thankfully because of crypto. I'm a Red Panda earner, so it's like I'm kind of faced with a dilemma where it's like I kind of want to go that entrepreneurial route and quit my job that I've been in for like 8 months now. Started investing this summer. but I'm kind of stuck in between where it's like, this crypto could go higher, but it's also
So you thinking about selling your crypto to support your lifestyle as an entrepreneur?
yeah, like I kind of want to go all in on learning how to trade and kind of do like long-term options and just build a really like a decent portfolio. But I also want to educate other people. So that's kind of like my entrepreneurial passion, like teaching other people how to invest. Thankfully, like with EYL, Ian, and all the other educators on IG and YouTube, I've been able to like grasp a lot of knowledge. But what I want to do is really focus on the Latino community and kind of go that route. But I don't have the time right now because my job is pretty demanding. So it's like this is my passion, and it feels like this is the opportunity that has presented itself right now. So it's like I'm kind of stuck. Do I go that route like John Henry kind of said, or kind of wait for it? So
Can I jump in real quick?
yeah.
If you believe in crypto, don't sell it. Hold it for 10 years. 2, don't quit your job, because I'm going to tell you, the ugly side of entrepreneurship is no one tells you how tough it is. How many hours do you work at your job?
Probably 50.
How many hours a day do you work?
10 hours.
I'll eat your lunch. Here's when you know you want to work for real. You ever been in love or met somebody that you could not stand to not be around? If you don't work that job more than you be around her, you should not do it.
And
go ahead.
Another thing with the Bitcoin situation, and do your own research on this, but you can actually, like, some people have an issue with it. It's like, let's say all of your money hypothetically is in Bitcoin, but you know that Bitcoin, you're thinking that Bitcoin's price is going to go up. So you don't want to sell your Bitcoin. It's a catch-22, because it's like, if you sell your Bitcoin and support your lifestyle, then you're going to lose it. So you can actually borrow against your crypto, and you can use use Bitcoin as collateral. There's different sites. I think one is BlockFi, like blockfi.com, and it's a few. It's actually, it was actually a coin. I'm trying to think of the coin. It was a while ago that but that was the utilization of the coin, was to actually use your crypto as collateral and actually loan out the crypto, and so you don't actually have to sell the Bitcoin to actually still make money off of it to support, because that's like a catch-22. And that was actually when I found out about that coin, that was something that made a lot of sense to me, because I was thinking, like, you got all this Bitcoin, it's like stock almost, like it's like right. It's paper. If you need money, what are you going to do? You don't want to sell it. So there are alternatives to that. But thank you for your question, bro.
Yeah. Real quick, John. I would say this too, man. And I know your job is very demanding, but find time, right? Allocate your time differently. Yeah. Whether you're doing the work on the weekends, because people learn every day, all day. And so if you want to do that, and that's your passion, because it sounds like that's what you want to do. Yeah. I would definitely just try to do it on the weekends. Study on your lunch breaks when you get home. Just allocate your time a little bit differently and pursue it, man. I don't discourage anybody that has a 9 to 5. Like I was a 9 to 5er, but I'm telling you, lunch breaks, I'm studying. After school, I'm studying. Before I wake up, when I wake up in the morning, 5:30 in the morning, I'm studying.
Yeah, and I'm not saying that to dissuade you. I want to show you the real. I can try to tell you right now, chart up right now. Listen, but you have to realize, and one of the biggest mistakes you're going to make in building a business, you're going to miss time with your family and friends that you're never going to get back. If you want to leave when the business is producing 5 or 7 times what you're making now, because at some point you're going to hit a rough patch. And guess what happens? I'm assuming that you're Latino. In the Black and brown community, when our entrepreneurial ventures don't work, our family says, you should have kept your job. I'm telling you what I lived. Wait, there's nothing wrong with working. There's nothing wrong with working. And if you hate your job, use that as motivation to get better at this, and then you can make your exit. But entrepreneurship is not easy. But if you want it, use it as motivation, come out, kill shit, and then in a year or 2, you'll be dramatically different.
Can we talk about the elephant in the room?
What's that?
Dogecoin.
Is it Doge? They keep saying it's different.
Dogecoin was one of them that invested in 2017. That's kind of like the other dilemma.
Like, some say Doge, some say Doge.
Doge, yeah. I saw Snoop put a tweet out.
Doggy dog coin.
the Dogecoin.
So the Dogecoin, whatever. Crypto enthusiasts are gonna slaughter us for this. All right.
Not a joke anymore.
This is something that it has to be addressed. It started off as a joke. And Elon has been running this thing crazy on Twitter. He put a tweet out the other day that said, like, what do you think the future of money is? Dogecoin or all other cryptocurrencies combined? It was like 73% of the people said Dogecoin. And it's running, and everybody keeps asking me about Dogecoin. So what are your thoughts on this?
Yeah,
It's gonna fall apart. I'll say. Y'all shoot me on Twitter how you did about GameStop and AMC, and then
I mean, people were in it. I mean, it just gives us flashbacks of like when something was under a penny, right?
Yeah.
We're talking a tenth of a penny to now it's at 8 cents. And so people are looking at those returns as they're climbing. It's just like, yo, I don't want to miss out.
yeah.
And that's what happens in that crypto space, man. It's like, I don't want to miss out.
For those of you who are in a good job, I just want to stress, and I was talking about kudos to my barber John. I was talking to him about this. You have to know your predetermined exit, whatever that is in stocks, make that a multiple of 10. So normally if you have 100% return, you can push to have a higher return. I'm looking at the chart right now. It ran up. So if you guys got in a penny, it's at 8 cent. Maybe take a quarter of the profit and let it run. And if it pulls back to 6 cent, get out and you hit a home run. What I don't want you to do is it peels back in March and goes back and you're like, man, because what is the competitive advantage? And also look at the market cap for crypto, just Google it and see where they rank. It's the same thing. I need you guys to be careful, but even if something is a penny, I know we won't talk about penny stocks, but if you get in at a low price, which has an advantage, know what your exit, same thing John talked about, multiple. So if you're going to trade something that is highly leveraged or low float or pink sheet, what is the multiple in which you're going to exit? You can't have FOMO. If you exit at 10x, 12x, it's a home run, man. It's a home run. But Dogecoin.
Yeah, I mean, and Elon tweeting about it and saying to the moon, and it's speculative, but it drives the coin up. I mean, that's why it's crazy. I'm watching Snoop Dogg put a tweet out and like, all right, people are really on effort.
If institutions get behind it, it'll give you a case.
Doge to the moon.
Anything that they say goes to the moon.
Doge to the moon.
Oh,
I'm
HODL.
I mean, my 2 cents on this is this. Doge to the moon, yes, that's gonna happen. But just because you can make money on something doesn't mean that it's fundamentally sound.
It's a trade.
It's a trade. It's a good trade.
It's a good trade.
It's a good trade. It's a good trade. It has no real utilization. It's not a good fundamental crypto coin. Any crypto expert will tell you that it was started as a joke.
Yeah, that's why the logo is what it is because it was a joke.
You can make a lot of money on jokes.
It's a fact. It's not funny no more.
No, it's not. So I will say this. Long term, I believe in Bitcoin.
Yes.
I believe in Ethereum.
Yes.
I don't believe in Dogecoin a lot. I don't think it might, who knows? Anything is possible. Do I believe it's going to be here 20 years from now? Probably not. But do I believe that it might go to 50 cents? Probably.
Yeah.
So that means people can make money.
So you can make your own decision on that.
I'll say this. The last time that it hit above 6 cent, quiz time. When was the last year that it hit above 6 cent? And then what happened after that? So my underlying philosophy on anything, if you believe in it, hold it for 10 years because you have an 80% probability of it working in your favor. The last time it hit this price was what happened?
January 2018? I'm not even looking at the chart.
2014.
2014. Okay. Yeah.
Yeah. Dogecoin. Well, yeah, hopefully. All right. So
I don't care because you got and go here. Like you need to know when you're going to get in. Because I was a gold holder in Zamundi, right? If you have to know if you're getting in at a certain percentage, and if you guys just the top is 100, if you just not mark them for a 5% ratio or 10% ratio, that'll tell you your buy levels. What's happening is it's running up, and you're getting FOMO. We talked about it last week with liquidity. Yeah. Stop chasing at too high of a price.
So if Jabba tweets about it, it's on the lead.
Kudos to Gotti, Chris Gotti.
Shout out to Jabba.
Doge to the moon. This is not financial advice. Don't buy Doge. They're gonna buy Doge. It's gonna crash. Elon playing with y'all, man. Elon be trolling.
1.5 though.
But you never know.
1.5.
You never know. Well, that's not a troll.
That's big. That's a billion.
The Bitcoin situation is not a troll.
Situation.
Mm-hmm.
That was a real situation.
But even when JP Morgan was saying it won't be a good asset in London, they were buying it. That's why I tell you guys, don't follow what someone says, like follow what they're doing.
Jamie Dimon was killing the space in 2017, 2018.
Accumulating shares.
2020. Oh, wait, surprise. We've been investing in the space. It's just the way it is, man. Follow the money. Don't follow their words, follow their money.
Yeah. follow the money. And shout out to the Bitcoin Trust also.
That's moving.
Justin told us about that. It was up like 17% today.
I got it up. Yeah, 20% today.
Because Bitcoin went up 20%.
Yeah.
So
20%.
GBTC is the Bitcoin Trust that you can actually buy on the stock exchange. So for people that are,
It's an ARC fund too.
oh, is it?
Yeah.
So people that are still a little nervous about, putting their money in cryptocurrency because you can lose your wallet or you don't know how to do it. You're comfortable buying stocks. You can actually buy the Bitcoin Trust, which mirrors. It's like an index fund kind, like it mirrors Bitcoin. Bitcoin.
Don't buy it right now; it's too high.
But and Ethereum started trading today in futures.
Futures, yep.
Yeah, Ethereum.
When the thing to get back, boys are in trouble. But also 4-year target. I know you guys asked for the targets. 126.99. So if you're gonna hold GBTC, 126.99 is like an exit where you can start to look at plan, which gonna have Bitcoin at like 126,000. Yeah, 4 years. And no, I'm not changing my stance about Bitcoin. I've been like, my thing is like, if you
That's a big target.
What?
126,000.
The Bitcoin?
Yeah.
Oh, that's gonna happen next year.
because interest rates stay low, funds are going to continue to allocate place. Okay, and truth be told, Kathy ruined the game for a lot of investors who were doing a terrible job. So now she'll come in and knock out 40, 50%. You've been giving me 7% and not doing any work, Randy or whatever hedge fund. Now all of a sudden, this woman said, I can get you a multiple of that. You have to then produce. Now you have an asset class that can give you a higher return. They have to then pour money, and then institutions have been doing something, building a base. And that's part of the reason why it's going up while its interest rates are at zero.
Bitcoin is one of the most obvious things that I've seen in recent history. Banks have been piling into Bitcoin. JP Morgan piled into Bitcoin. Hedge funds have piled into Bitcoin. They have the Bitcoin. They have the Bitcoin.
Mute that, Mike, edit that.
Respect. Yeah, respect. They have the Bitcoin.
It's live. We live.
They have the Bitcoin fund on the stock market, and Elon just put 1.5 billion into it. So you think all these people's putting all this money, all this time, all this energy for it not to go up?
Yeah. So that's crazy. So Tesla had 19, I think, was it 19 billion? And they spent 1.5. They said, yo, don't be surprised if like Apple makes it.
Jack did the same thing. Yeah.
You know what I'm saying? So
We'll talk about it next. The conglomerates are all going to move against certain things.
yeah, that was crazy.
Yeah.
That was weird. Yo, shout out to our ladies behind us today. Before we go, shout out to our ladies behind us. Yesterday was the 30-year anniversary of Whitney's Super Bowl national anthem. So we got the classic. We got a classic, that Whitney Houston album. My mom used to play that every Sunday while I was growing up. So we got that, and of course we got the Queen Janet up there. The Control album. Still in there. And of course, the legendary threes are up top, y'all. Yeah. Legendary threes are up top. Probably in my top 3 singles of all time.
Jordan 3s are serious.
Serious. So yeah, man.
What size you in?
12. What's going on? I got
Lock the
closet. They said the EYL new coin. Shotty just
Man, that's rated R.
Trading after dark.
21 and up, crypto. Coming soon.
Hey, yo, look, man, listen, as always, before we go, reach out, text somebody, call somebody, check in on somebody just to make sure that they're doing well. But also, you know what I never forget? I always forget to say?
What's that?
Do a self-inventory. Do a self-inventory, man. We've been saying for weeks, reach out and check in on people around you, make sure that they're doing good. But every now and then you got to do a self-inventory to make sure that you're doing good, right? And that's super important. A lot of times we don't spend time doing that. We got to take care of ourselves, y'all, before we can take care of anybody else. And so self-inventory is important. But again, reach out to people who you haven't spoken to in a while. I mean, you never know what one phone call, one text can do. We love y'all. It's always fun rocking with y'all. Ian Fluent, that's 2 times in 3 weeks, man. You never know. And peace, man. It's been real. We'll see y'all on tomorrow. The Master P episode will be dropping. That is a big one. Biggest. Shout out to the team. Shout out to MG and Denise for putting that together. Shout out to all the studio audience that was in attendance for that. We had Wall Street Trapper. We had Maddie J. We had Spectacular. We
Alex
had
Energy. MG the Mortgage Guy.
We had Dave Shands before he left. He was there to watch it. So
Dave Shands.
it was a crazy time, and it was one of those moments. And like we said earlier, man, a lot of times we are in the moment and we forget to realize like, yo, this is monumental.
Yeah.
So we took time to just recognize that. And Wednesday again we have EYL University, the class with Jose the Credit Dude, which is going to be phenomenal. And then we got some surprises. We got some surprises that we're going to send out very soon.
Yeah. Shout out to everybody out there. This will be out on all podcast outlets in a couple hours. So rate the pod. Don't forget to go to Apple Podcasts, subscribe to the podcast, rate it 5 stars, and just leave a comment. You can just leave whatever comment you want. Just leave a
Say
comment.
it's amazing.
Yeah, positive comment. We'll leave you with the last word, Ian.
Troy, I appreciate you opening up your home again. Kudos to my brother in the back show with his headphones on. I see you. Rashad, I appreciate you. You guys, quick tip. How many hours a week do y'all work on average? Because there's a perception of I can do 3 hours a day and build an empire. And
I mean, I tell people all the time, for me, it's no real work schedule. You just wake up
and
you get to it. You take breaks in between. You might eat. You might go to the gym. You might, you know what I'm saying? And then you just work until you fall asleep. Yeah. And that's it.
That's great. There is no hours. That's a fact. I woke up this morning. My son saw me watching the news. He said, "Daddy, this is like 7 o'clock in the morning." He's like, "Daddy, you're not working yet?" Yeah. Because he's used to seeing me up and going. But yeah, there's no hours, man. But I wouldn't trade it. for anything.
It's the price that you have to pay for freedom.
Yeah.
I'm just going to be honest with you guys. So for those of you that are aspiring to be entrepreneurs, the reason I keep bringing this up is I know if you're not doing the work already, and I was there before when I was like in a business that I didn't love, and it was like a pain to answer the emails or hop on the calls. If it's a chore, don't do it. But to my family, I love you. To my friends, I love you. I appreciate you. Thanks for opening up your home again. Thank you for making this magic. We got to go trademark Bitcoin.
I didn't actually say that. It was slurred but it wasn't. It sounded like that. It was one of those things where it sounded a little different than what it actually was.
Because it'll be a fake page that pop up like, yo, I got it. Yo, coins.
I'm glad you said that. That's not us. That's not us.
Yeah.
That's not us.
Oh yeah. All those. There's a lot of fake pages on YouTube that have Earn Your Leisure on it, and they're asking people for Cash App. They're asking people to text a number to what, and at $5,000 giveaways and all of that. Those are scam pages. We have nothing to do with that. We try our best to, let people know that. But unfortunately, there's always somebody that's going to try to get over on people that,
careful.
So don't fall for that. Don't send any money to any weird address.
And we're not going to ask for the money.
Yeah, it's no giveaway going on. If we do a giveaway, we all know we're doing a giveaway. We'll say it. If you ain't here, say we're doing a giveaway. Don't have somebody else trying to trick you out of $5,000, please.
And last thing, for real. Number 1 and 2, 1,000 scholarships. 1,000, right?
Yeah.
Yo, run that up.
Run them numbers up, man.
I want to see 1,000.
Y'all got to quit acting like we'll put you on to a lot of stuff. Red Panther family members run it up. But we provided some incredible value. So with that slot, you guys want to be in. And yes, you'll be in the new one with all the bonuses. So,
and they're asking for Shark Time. Can we start with Shark Time next?
Yeah, let's do it.
We'll a little bit. We'll give a little Shark Time.
Yeah.
So next week is we can't say everything is top secret right now, but
I want to say it so bad, but they're going to jump on me.
Next week it's a big one. It's a big Market Mondays next week. We keep raising the bar. We got to just keep raising the bar. So
I was about to say the guy choked me.
Next week, man. We got a huge surprise for you guys. So that's it, man. Thank you guys for rocking with us. We'll see you tomorrow. Tap in, and we'll definitely see you next week.
Love you. Over and out. To my mom, I love you.